Welcome everyone to Real Estate with Gwen Price, and I'm very happy to have with me Trina Tallon, a mortgage agent with Neighbourhood Dominion Lending. Unfortunately, Lana Watier, my broker of record, couldn't be with us this morning, but we're going to get through this and talk about what's going on in the market and mortgage world and see our things. It's a beautiful sunny day, but cold.
It's like we said, Gwen, it's been a really nice fall, but it's coming.
Yeah, there's no way we can avoid it, is there? I haven't figured it out, but even with global warming, we're going to get snow. It's yeah, but it's been a beautiful. I actually planted 100 tulip bulbs the other day, which I thought, oh, well, I probably missed my opportunity, but I didn't. It was beautiful. So
that's amazing. Good for you.
Yeah, so we'll see if they all come up in the springtime. But anyway, oh, so just a little quick recap of what's going on in the market right now. It's like a balanced market. So what that means is that it doesn't favor the sellers or the buyers. It's balanced. There's a few more opportunities for buyers. The average sale price is we've been sort of steady for the last 3 months. It's right at 468 for October. It was at 470 for August and September. So the average sale price is down about 4% from the peak in February, which was 489. Also looking at the home price index, which is a new thing that we've got access to, it shows that index is down about 13.5%. So it depends which stats you look at, but we're still ahead of what we were last year. So for instance, last year at the end of October, the average sale price was $395. So we're still 18% higher than what it was last year. So yes, people are realizing that when you list, you're not probably going to get multiple offers. You're not going to get 100 over list price. All that kind of craziness is kind of stopped, but there's still opportunities for sellers. There's still opportunities for buyers, especially if a seller's been in their house for a long time. If you've lived in your house pre-pandemic, especially if you've lived in your house 20 years, your asset has appreciated considerably.
I agree. Even if you purchased in 2018 or 2019, your asset has increased significantly.
Yes, that's right. Yeah.
So great.
Yeah, because we all read the news, we hear these things that are scary, the heck out of us. Interest rates went up, was it 0.5% or 3/4? Half, right?
Yeah, the prime rate went up half.
Okay. And are we expecting another rate hike? Yeah.
They're on the fence. They're being wishy-washy because our economy is not doing at all what they think that it should be doing with the changes that they've made. We had the highest increase in employment in October that we've had in a long time, and we were already at what the government calls fully employed.
Yeah, and that's interesting because there's such a demand for employees right now. Every person I talk to in business, they're looking for staff. Every restaurant I know is looking for employees, but so it's interesting.
I read an article last week. I can't remember. It was either the Globe and Mail or Financial Post or something like that, that stated that during the pandemic, the government hired 9 times the amount of employees that the private sector did.
Wow.
That's a lot of people. And one of the reasons why for the hiring is, we had retirement was one, but the biggest was having to deal with CERB. And now they need the staff to deal with to determine whether or not people who did take the CERB, businesses, whatever the business one was called, I've put those out of my brain now.
Yeah.
The personal and the business side of thing, now they're investigating so many to find out whether or not fraud was committed and they should be taking it all back.
Oh my God.
So
Oh,
that's, you know,
yeah,
that's a big part of the reason why the private sector is struggling to find people now, because it's difficult for them to compete with the public sector and the amount that the public sector pays versus private. And, you know, we play that balancing act of, you know, okay, if we pay more for labor, with gas being up, and then that puts the cost of food up, and that puts the cost of, you know, eating at a restaurant up. And I couldn't believe it. I went to a restaurant the other night and I had 2 glasses of wine, and I bought someone else a beverage, and I had a little thing of salsa, and my bill was $55.
yeah. Pretty
And I
much.
was like, what just happened?
Yeah. Well, even in, and I haven't noticed, I guess, for a while what the price of diesel was, but looking at it the other day, and I noticed it's like I think it was 234, and gas was 179 or something. I'm thinking, wow, no wonder all those goods that we are transporting are so expensive, because look what the truckers are having to pay for their fuel.
Diesel
Yeah.
is about over 3 now.
Wow. Geez. Yeah. So that has a ripple effect to all of the things that, you know, the food you eat, everything you do is affected by the transportation costs. And that's a big chunk of the cost, is not only the labor, but it's the cost of fuel.
So let's chat about that a little bit and how it relates to mortgages,
yeah,
right?
you would think there's no correlation.
If we look back to 2019, interest rates were, and I'm always going back to 2019 and doing my best to ignore the years in between.
Yeah.
If we go back to 2019, you know, interest rates were around the 4% mark if you're buying a house for less than 20% down. Right now, we're looking at about the 5.29% mark.
Okay.
So if you exclude 2021 and 2020 and the beginning of 22, that increase from 2019 of around the 4 mark to like 5.29 right now, with what's going on with the inflation and the world economy, that's not a huge difference.
Mm-hmm.
The majority of folks that are feeling this the most, or are going to feel it, are the people that purchase like in 19, 20, 21 kind of thing, when they go for a renewal or they go to refinance, or, you know, things like that.
Yeah.
Now, I'm having a lot of clients refinance. I'm doing everything I can to have clients not do a 5-year fixed term, or anyone that will listen to me on the planet to not tie into that 5-year fixed term. Mm-hmm. Because they're looking at paying like 5.25 to 5.5, depending on how much they do for down payment, for the next 5 years. And if the rates, or I'm going to say when the rates go back down to like below 4 or close to 3, like that 3 to 4 range, let's say. Yeah. And if they want to break their mortgage and they're up at 5.25, they're going to have a huge penalty to pay. If they need to refinance to do the roof, to buy another house, they want to pull equity to purchase a cottage, pay off debt, anything like that. So I'm trying really, really hard to get out there to tell people to, if you want to go fixed, let's talk about a 2 or 3 year term.
Shorter term. Okay.
And I also am pushing variable like there's no tomorrow still, Gwen, with the possibilities of increases, because variable is versatile. And 70% of Canadians break their mortgages within 5 years. And we know what goes up must come down. So as we get things sorted out, these rates are going to start to come down again, maybe halfway through next year to the 3rd quarter of next year, but that's what everyone is anticipating. So
yeah,
I just really want people to get locked in.
Right. I mean, you hear all those rates, and people are scared, and people like security, so they kind of hedge towards the fixed rate, but it may not be the best option. And certainly that's why they need to talk to a professional, right? Because there's so much misinformation on the internet, right? You don't know what to believe.
And if they want fixed 100% to keep themselves in line for the next like couple of years, go the shorter term.
Your term, yeah.
Right? Because that will give you more options for later. Now, what's happening out there as well right now, which doesn't affect purchases, but definitely affects our economy, is that with the prime rate going up to being 5.95 the way it is right now, a lot of people are in lines of credit that are unsecured that are +2 to +5. So they're looking at, 8, 9, 10, 11, 12, 15% interest on their unsecured lines of credit. Credit cards, of course, all credit cards have gone up.
Yeah.
Because the cost for the credit card companies to borrow money to lend it has gone up. And I'm seeing a lot of people with big credit card debt, big line of credit debt again, and refinancing into like a 2 or 3 year term, let's say, at, let's say 5.5% is a lot less than what they're paying in interest on these lines. And especially for anyone that's owned their houses, like for a couple of years now, where we've had the increase in values, now's the time to, let's get that appraisal done and refinance and use the equity in your home to pay off those high interest debts.
To refinance, what are some of the costs that are involved for somebody? The appraisal?
Well, it's very situational. So I have basically two categories of clients that refinance. I have clients that are still in the AAA world that have great credit and all that kind of stuff. They just, took advantage totally of staycations and bought gazebos and boats and all that kind of fun stuff, right? Yeah. And then the second category is people who've gotten themselves into credit problems where they no longer fit with the AAA lenders kind of thing. With the AAA lenders, for the most part, when we refinance, there's typically an appraisal involved. It depends on whether or not the value comes in with the banks, and there are legal fees involved. But I have a number of lenders that will provide a rebate after closing to cover up to $1,200 of those costs.
Oh, okay.
And you don't necessarily need your lawyer. There's a service called FCT that will do it, which is sometimes less as well. Okay. And then, but on the B side of things, they don't cover anything. So, you have the cost of the appraisal, yeah. You have the cost of the legal fees, all of that kind of stuff. So, but that all gets built into the mortgage. It doesn't have to come out of pocket. So
what's that thing I'm talking about? The credit rating, like what's the mark? What's the good rating for somebody?
Well, CMHC likes to, credit score is such a funny thing because I've seen people with high credit scores with collections and all kind of like, because it's a very weird calculation that happens. And then I've seen people with like terrible credit score, but have good credit, but it's very thin. So they have one credit card and they've had one student loan, let's say, and they missed a bunch of payments on the student loan. Well, because they only have two trades, two debts, it significantly affects. Whereas if someone has like 4 or 5 credit cards or 3 credit cards and a loan or 2 loans or something like that, a blip affects less because they have so much credit open. So we like to see about 680 is a decent credit score. The highest is 900, which I've only seen once.
Wow.
People with great credit are typically in the mid-8s.
Mid-8s, okay.
Yeah. And then for refinances, it's interesting because in 2018, when the stress test was 100% implemented, what happened in the background was that refinances are no longer insured by CMHC or Sagen.
Okay. Now
it's 100% on the bank when people refinance, so their interest rates are higher.
Okay, that's why people ask me all of this stuff, and I said, oh no, you got to talk to a specialist, right? Because I mean, that it has become so complicated over the years, right? You used to go to the bank and they'd give you one rate and that would be it. But now there's so much involved in it that we don't even see. We see a rate, advertised, but we don't know who is that for, what does that mean, all those things. So that's why definitely need a mortgage specialist to navigate all that.
I found an old rate sheet from when I used to work at a bank, which was 2015. And it was basically, here's your 5-year fixed.
That was it. I don't
Now it's like this.
well, like a lot of things, it's become more complicated, and the banks are much more stringent about everything because we've got mortgage fraud, we've got money laundering, all this stuff going on. So there's a lot more checks and balances. There's a lot more things that have meaning that we never would have thought of.
I have to tell you a little story. I have a client who's been at HSN for years and years and years. Like I have T4s going back for 4 years. I have like a number of different pay stubs. I needed a letter of employment. She had someone in her department write the letter of employment. It was on HSN letterhead. It was like exactly everything that we needed. It went to the bank. The banks do verbal to confirm employment. Called up the woman that wrote the letter, and she said, I never wrote the letter.
Oh my God.
I got a call from the bank saying, we're canceling your deal. We think it's income fraud.
Wow.
And I'm like, no. So pump the brakes.
Yeah. Oh, wow. Hey.
So the whole reason why this woman said that, no, she didn't write the letter was because she wasn't supposed to write a letter of employment.
Oh, okay.
So thankfully, we got it all sorted out.
Yeah.
So that just goes to show you, Gwen, even though I had years of T4s, all kinds of pay stubs, that they're very, very concerned about fraud and money laundering. And if anything looks out of sort, they're not doing it.
Well, and I can't remember, was it Marketplace or W5? There was something recently going on, and I'm thinking, oh my God, what are you people doing? Like, that's insanity. You're not really helping when you're trying to get somebody into a house and you're doing all those kinds of crazy illegal mortgage fraud. Like, you're not doing them a favor, because if they don't have the money to carry that debt, it's just going to blow up in their face, and they're going to have credit problems for many, many years because of it. But, that's very disappointing that there are people that are in my profession and your profession that are doing things like that, because it doesn't help any of us.
No, but this has been going on for years, like, and years and years and years. And the banks, like, I remember when I bought my first home in my 20s. Not saying how long ago that was, Gwen.
Just last year.
All I needed was a pay stub and a bank statement. And I was buying my first home, and that's all that I needed. And it has changed so much, because back in the day, if you had WordPerfect, you could make your own pay stubs and make your own bank statements, because they didn't have all the security. If you actually look at a bank statement, you'll be surprised to see like the different fonts and there's marks in the bank statement, there's things like that. And now in the back end, what a lot of people don't realize is that the banks check with one another to see if the documents are fraudulent or not. And that's how people, so that's why, people say to me, oh, do you want my firstborn next? And I say, well, you can thank everyone in the past that's committed so much fraud that this is where we're at now. So
exactly. I mean, try to get somebody in a house to that degree, that is insanity. That's why we have all these checks and balances, and I'm glad they're catching up to some of these people, because it does our profession. I mean, that's terrible. Like, I mean, my license is worth a lot to me, and I will not jeopardize it for anybody. But so but that's what's changed in the banking world, because it isn't no longer that easy to give the paperwork. There has to be follow up with all of that. You just can't do stuff like that. Anyway, I don't know, my brain, all these people, it's amazing to me, all these criminals, they're so creative. If they only would use that creativity in the right way, imagine what our world would be like, right?
I agree with you 100%. So all we can do is, make sure that our clients are prepared. Well, before they start going out and shopping, and even if they received a pre-approval 2 or 3 weeks ago, still check in with the person that gave them the pre-approval and make sure it's still valid. Because even though there's really two parts to the pre-approval. There's the rate hold that a lot of banks will do, and then there's the actual pre-approval based on the person themselves. So a lot of people think that, because they get a rate hold for 90 or 120 days, let's say, that their pre-approval is good for that amount of time. It's not. Because with rates changing, and even though we use the stress test, which is like the contract rate plus 2%, if the contract rate goes up again, so 2 weeks ago, we were looking at 4.89 for a 5-year fix, now we're at 5.29. So now every pre-approval needs to be redone with another 0.5% on the stress test.
Right.
So pre-approvals don't really matter. There's rate holds, and then there's these pre-approvals, which really you need to check. I'm going to write an offer. Here's the property. Here's the listing, not the link to realtor.ca, because we need the property tax amount too. And then just sit there, rekey the numbers, make sure nothing's changed, and off you go. Bob's your uncle. Write your offer.
Well, again, that's why they need to talk to somebody like you about all of this, because it is way beyond me. That's for sure. I mean, we know to a general degree, right, what's going on, but realtors are not mortgage specialists. That's why we need somebody like you in our in our group that can help our clients buy the house that they want. And there are opportunities right now for buyers, so it's still a good time to be looking. It's still a good time to be selling, and I'm always optimistic. So
absolutely, real estate's always a good idea.
Yeah, absolutely. It's an appreciating asset, not a depreciating one. So over time, look what people, my first house was 30,000. Again, I'm dating myself, right? But yeah, it appreciates. It appreciates. So it's a good thing to be putting your money into every month. And if you're not quite there yet with your down payment and all of that thing, that's why still it's very important to talk to a mortgage specialist to plan for that day when you do have it, and maybe offer some advice how to, give up that coffee every day or something or whatever, because there's ways to save. And I know it's tough for a lot of people, but there's still possibilities to buy your
Well,
house.
Gwen, I always tell people it doesn't matter what walk of life they're in and what monetary earnings bracket they're in, to, print your bank statement, print your credit card statement, and take a look at it to see what are you spending your money on.
Mhm.
And if you sit there and you add up, $4 at Tim Hortons every day for 30 days, and you multiply that by 12, that's a significant amount of money that can go towards your down payment.
Yeah. It's
So
true. Yeah.
like adjusting our,
Yeah. Is it a want or a need, right? And
exactly.
a lot of times it's just a want.
Exactly, that's right. So back to basic budgeting kind of stuff, but
yeah. Well, as always, Trina, it's very informative, and I always appreciate your insight into everything, and put your contact information for everybody, and they can reach out to you and find out how they can buy a house, and I can help them with that.
That's right, you can, Gwen. Awesome.
Yeah.
Thank you for your time. I appreciate it.
Yeah, we'll talk to you soon. Take care.
Yes, take care.
Bye.